Hey investors! Your favorite anime analyst is back. Today, we're diving into one of the most resilient healthcare giants in the world, Johnson & Johnson, a company that literally saves lives and sometimes saves portfolios too. Johnson & Johnson develops and markets healthcare products, worldwide pharma, medical devices, biotech, you name it. They operate across 60 countries and impact over 1 billion patients every year. Multiple profitable divisions and a steady stream of medical innovation. Their core business is premium immunology, oncology, neuroscience, cardiovascular treatments, plus a massive medical device division covering surgery, orthopedics, and robotics. It's a diversified empire. And honestly, very hard to compete with. Revenue is clean, stable, and steady. Exactly what you expect from a healthcare leader. Pharma is the main growth engine. Medical devices add resilience. And together, they form a rock-solid business. This is the type of revenue curve long-term investors love. J&J's stock doesn't moon. It behaves. Low volatility, strong downside protection, and a reputation as a defensive anchor. If you like stability more than adrenaline, J&J feels like home. Revenue growth is modest but consistent. No explosive jumps, just reliable long-term expansion. It's the classic, slow and steady wins the race business model. Net income remains strong despite regulatory pressure and rising R&D costs. J&J consistently converts sales into real profit year after year. Not many healthcare giants maintain margins this well. Free cash flow is one of J&J's superpowers. Massive, predictable, and extremely stable. It funds R&D, acquisitions, dividends, everything without putting the balance sheet at risk. Operating margins remain excellent, showing strong pricing power and cost efficiency, even with biosimilars eating into market share. J&J keeps margins at the top of the industry. EPS grows slowly but consistently. It's the financial version of comfort food. Nothing flashy, but it never disappoints. The PE ratio sits in a reasonable balance zone. You're not overpaying for hype. You're paying for resilience, quality, and stability. J&J is a dividend king with more than 50 years of consecutive dividend increases. If your love language is passive income, this stock speaks it fluently. Long-term debt is very well managed and fully supported by strong free cash flow. Financially, this company is built like a tank. Analysts are generally positive, with most leaning toward buy or hold. Nobody expects J&J to double in a year, but everyone respects its long-term strength. Strong global presence, diversified product lines, and huge cash flow generation. J&J checks all the boxes of a high-quality defensive stock. It's the definition of built to last. But yes, there are weaknesses. Legal risks can be expensive. Competition in pharma is intense. And renewable ramp-up is slower than expected. Again, this is not a growth rocket. It's a fortress. I'm not a shareholder of Johnson & Johnson, but objectively, this is one of the safest and most resilient companies in global healthcare. If you want stability, dividends, diversification, and a long-term anchor, J&J stands out. This is, of course, not financial advice. Always do your own research before investing. And tell me in the comments which stock you want me to analyze next. Your waifu analyst is always here for you.